Hello, everyone, and welcome to episode 11 of the New Trader's Playbook. In today's episode, we're going to be talking about when not to take a trade, the skill that saves accounts. Sometimes we get a lot of attention paid to when to trade, how to trade, what to do in a trade, but we don't always talk about the times when it's necessary to stay out of the market. So that's what we're going to be discussing today. Most new traders ask, when should I trade? But the best traders are obsessed with the opposite. When should I stay out? So that's what we're going to be talking about today, the difference between when we should trade versus those times when it's really a much better idea that we stay far away from taking any trades. So to begin, we have to understand that not being in a trade is actually a trade in itself. It is a choice. We have to see that the market is always moving, but every move in the market is not always your move. We've discussed in the past few episodes talking about different strategies that you can create and how you can backtest them. But the most important part of backtesting a strategy is understanding that not every single day will your strategy appear. Not every single day will the market move in a way that is conducive to your winning. Right? Because there's not just two options when you go into a trade. It's not just win or lose. There's also a third option that sometimes people forget to think about. Every single trade has three different options: win, lose, and no trade. We have to remember when the market is moving, when it is, up and down and hundreds of points sometimes, that doesn't mean that we have to sit there and feel FOMO, right? We have to think, oh, I'm missing out on opportunities to make trades. But they're not the trades you tested. If you're just jumping into the market because it's moving, remember, we call that gambling, taking shots in the dark, and that's something we never want to do. Not taking a trade is a choice. And sometimes it's honestly one of the best choices you are ever going to make, especially when it comes to saving and protecting your account. That's the key. If your tested edge does not appear, don't run into the market and start throwing away your money, right? You earned it. It was hard to get. Keep it. Remember, not trading is an option. If it looks hard to make money in the market, you're looking at the charts, then it probably is. Those are the days that you're going to want to step back. You're going to take a second, look at the market, and not push harder. Right? That's really, really important. You got to put these things into your mind, because thinking that you must win every day, you must be green every day, you have to get a win, or you have to take a trade. All of that kind of puts you into a different mind frame. It kind of puts you in a place where you think that the market is like a regular job, where you just go in and you work and you take a paycheck. And it's not that way. We have to change the perspective that we have of trading. Because if you think every trade is going to lead to a winner or a paycheck, then you're just going to start taking bad trades, ruining amazing results that you have based on the strategy that you've backtested. You do not need to take a trade every day. Now, does that mean we shouldn't be watching the market? It's a very good idea to be watching the market every day if you can. But we do not have to take a trade every day, especially if it's not your time. If it's not your move, if it's not your setup, that is not for you. Now, market condition is actually really, really important, because if you find yourself in a super choppy sideways price and there's no follow through, there's lots of wicks and it's overlapping candles, there's a lot of fake outs instead of breakouts, especially if your strategy is based on trend, getting into the trend, riding the trend, you don't want to be in trades in the market when the market is not deciding on where it's going. Okay? We want to take advantage when price is leaving, when price is showing you that it has a direction. It's got a location it's headed for. Right? We also want to stay out of the market when there's extremely low movement or volume, when price really isn't moving. It is very, very easy, guys, to lose a lot of money inside of a very small area. Price may be going up and down and up and down and up and down in a really tight range, and you're just trading either in the middle, or you're not trading the edges, which is really the only way you can trade channels. This is a really, really bad way of losing a lot of money when you get too impatient and you're trying to make the market do what it's not going. The market is never going to do what you want it to do. We just have to get in when the market does decide that it is on its way to the type of trades that you have backtested. Also, want to be careful on wild news spikes or red folder news. We talked about that recently. Market conditions, important in addition to upcoming news. So we stay out of upcoming news. Price is going to break its normal way of moving. We want to profit off of things that have been backtested in environments that aren't unexpected or wild. So we stay away from news, right? Your job in the market is to trade when your edge has room to breathe. When it's choppy or there's news and it's spiking, these types of things can suffocate the trade that you are hoping to make. That we don't want to happen. And especially if you're the kind of person who trades with like a specific point value, if you're the kind of person that your strategy is, I trade at this location and then I trade for 10 points or 20 points. A tight, low volume movement, choppy range can really kill you on both sides when it comes to not being enough room, as I said, to breathe for your trading strategy to actually work. So we talked about the market conditions needing to be good for trading, but also it is essential that you are in the right mental state for trading. Your mental state is huge when it comes to your trading success. Sometimes the market is good. Sometimes the market is doing everything we want it to do. But the problem on those days is not the market, it's us. Maybe after we took a really big win or a really big loss, we need to be a little bit more careful after trading, because sometimes big losses can lead to revenge trading, which we've talked about before, where you are trying to jump into price and you think, oh, I can get it back. I lost it in one trade, but if I double up, I get a little greedy, right? I get a little greedy. Then I can make the win back much bigger and I can get back what I should have won. The market does not owe you anything. Remember that. All it owes you is to do the exact same thing that you back tested. That is what it owes you. So keep in mind, after something that happens, maybe you have a big loss, maybe change some things in how you approach trades after that. Maybe you stop trading, or maybe you drop your size that you're using. Anything that can stop you from blowing your account while you revenge trade, even after a big win. Sometimes we get a little overconfident. If you've ever had a really solid win, you know exactly what I'm talking about. Overconfidence can destroy traders because you think that you did something. You think you've locked in. Oh, now I know what I'm doing. And I'm gonna put in twice as many contracts as I had before because I'm on a roll. Nothing can touch me. I'm invincible. Yeah, that's when you're gonna blow your entire account. Right? So if you find that big wins and big losses are changing your mental state, your emotional state, be mindful of that. Write that down. Make sure that you know how to react after those things happen so that you don't blow your accounts. There's nothing wrong with taking a loss or getting a win, of course, but how we react after that has a lot to do with our future success as a trader. Now, some people do not think this is a big deal, but it really is. Trading is hard. Trading is really difficult. And you know what makes it even more difficult? Being sick. When you're tired, you're sick, you're stressed out, you've got some big life issue going on, and that's why you didn't get any good sleep last night. These types of things come with you. We've talked about it before. The market shows you who you are. The market will dig deep into your personality, and part of that is how you feel physically. So be very careful if you had a bad night, if you're super tired, if you're sitting in front of your computer or your phone and you can barely see because of how tired you are, that's probably not the right time to be taking trades and doing one of the most difficult things you could in trading in the stock market, okay? Lastly, that emotional hangover from the previous day. If yesterday was really hard, really bad, something happened, right? Maybe you lost a lot, or maybe if you had a big gain, I don't know. If you are bringing some kind of emotion, something in from the previous day, that is a place you need to be really careful with. Sometimes we can bring in anger from the previous day. We can bring in frustration from the previous day. Every single day in the market is different. You must treat each day individually. Yesterday doesn't matter. It's a new day, and we have to go into the market thinking so. Okay, so we've talked about some things that are necessary to do. Like in our last episode, we talked about things that we needed to do before beginning trades for the day. But there's also another type of pre-checklist that is probably pretty important. So before you get to trading, you need to ask yourself on three different things that are going to be really important. Number one is sleep. Did I sleep enough hours last night? Or do I feel rested? Do I feel super tired? This could help you to notice, number one, is it a good day for trading? Number two, emotions. Am I calm? Am I cool? Am I collected? Am I ready to approach the day correctly? Or am I still thinking about yesterday? Am I frustrated? Am I annoyed? Am I staring at my P&L, my profits and loss, thinking, oh my goodness, how am I going to get back all of this money that I lost? How can I make more? How can I do it faster? If you see that your emotions are coming into how you feel before you click that button, it may not be the right time to click the button. It may not even be the right day. Number three, focus. Am I distracted? Am I thinking about other things, stressing over other things? Can I actually give my full attention to the market, to trading for the next hour or 2 hours, however long you plan on being in the market? If you cannot give your full attention to that and you're doing other things, It may not be the right time to be in the market. It may not be the right day. And as a sidebar with that, I know a lot of people like to trade on their phones. That's fine, but please be careful with the types of distractions that you allow to come into your trading area. Trading is hard. And if you are not locked in when you're trading, you are going to find that stuff is going to distract you. And the more distractions you have, the less you lose a little bit of your own personal edge in how you're able to trade if you are distracted. So be really careful that you have the ability to be fully focused while you're trading. So maybe some possible rules you have for yourself. Maybe you say, if I realize that I am angry or stressed or feeling like I must get back what I lost yesterday in today's session, today is a no trade day. Why? Because if you choose to trade on a day when you are imbalanced mentally, emotionally, physically, you may just end up in a deeper hole than you're already in. You know, it's extremely rare to go into the market with this unstable mind and body and then just all of a sudden make a lot of money. Remember, trading is like 90% mental. So if your mental is not right, you've lost a lot of control that you have in the market. We don't have a lot of control in the market. We cannot control whether the market's going to go up or down. But what we can control is ourselves and the days that we choose to trade based on how we are mentally, emotionally, physically. All right, so let's take a look at another set of rules that we could have for no trade scenarios. These can be very hard rules, and every person that is trading needs to have some kind of hard and fast rules that they can use in order to say it's time to stop or it's not the day to trade. So just some examples that some people may have. You will want to make your own dependent on how you trade and what works best for you. So very basic examples. Number one, if I have 3 losses today that I'm done trading. Okay, that's fair. Pick a number, stick to it. If you don't stick to it, you can end up seeing your 3 losses that you should have walked away at become 12 losses in a lost account. Number 2, if I break my rules 2 times in a session, I'm chasing, no stop, random trades, and I'm done trading. Last week, what did we talk about? Last week, we talked about our demons, right? And this is a good way. If I keep breaking my rules, those demons are coming back to get me, right? And so what I need to do is I need to stop trading before they take me over, and I cannot do anything right, because it definitely does happen where all of a sudden you broke 2 rules, and then the next thing you know, you've broke 12 rules, and now you've blown your account. What we're trying to do is stop blowing accounts. You see that? Okay. Finally, if I lose blank amount of money, I'm done trading. We've talked about that with our graph. Remember that graph that talked about the consistent trader who was making money because they had a max loss limit. We're just talking about things that tell us, hey, it's not a good idea to keep trading. I should stop. Whether that is before you click the buttons or after you have started clicking buttons. You have to have rules. Remember, your goal each day is not, I have to win. Your goal is, I need to still be around next month. I need to still have money next month to be able to trade, okay? We want to live to trade another day, and then live to trade another week, and then another month, and then another year. This is how you control the market with a little bit of control that you have. This is how we stop from blowing accounts. This is how we are able to not lose everything. Maybe we won't make $1 million in a day, but we're not losing our accounts, right? And we're not feeling distraught and broken, because there's nothing that hurts worse than realizing that if you had just followed your rules, you would have been completely fine. That's painful. Follow your rules. Beginners believe professionals trade a lot more. Yeah, it's not true. In reality, they're just so much better than us at saying no. So what do we have to become good at? Well, we know we have to become good at losing, but we have to become good at saying no. Okay? So write your rules down. This is extremely important. We need to create rules for what constitutes as a good and bad trading day according to the market and you as an individual. So remember, you're gonna have to make up your own set of rules, but these are just some examples that hopefully can lead you in the right direction. First one, if I see a clean day with pullbacks to my levels, that's a trading day. Fantastic. If I see tiny ranges, maybe small ATR, if that's how you trade, with lots of fake outs and breakouts and wicks, maybe it's a no trade day, right? If I had a brutal loss yesterday, and today I can feel that I'm not really dealt with it. It's still that monkey on my shoulder. I'm still not ready to get back into the market with a fresh, clean slate. Probably a no trade day. Right? Remember, trading is about your mind. It really is. Don't fool yourself into thinking you can just trade in any state and come out unscathed. You will blow accounts if you think that you can just trade in any old-fashioned way and be fine. So let's take a look at some examples, as we have discussed things that we don't necessarily want to be in. Now, granted, I am going to say this with a partial sidebar. Every strategy that you create is dependent on the type of environment that works best for that strategy. Some strategies work well for channeling. Some strategies work well for these types of moves. Some of them do really well. And if that is what your strategy was created to do, and that's how you backtested it in those types of environments, fantastic. But let's say that you are using a strategy that is a trend strategy, which means you want to get in the trend and you want to ride the trend until it ends. If that is the type of strategy that you're in, you're not going to want to be in this type of movement. Now, you know anything about trading, you know that this type of candle set right here looks really indicative for the market open. Yeah, that's what happened right at the beginning of the market, right? And you can notice here how price is just kind of like bouncing in this area, up and down and up and down. Once again, if this is part of the way that your strategy works, fantastic. But if you are expecting to jump onto a move in one direction or the other, and you don't have a really specific way of entry, this is just a great way to get eaten alive. Also, overnight price can do that depending on what product you're using. Sometimes overnight price is just a bunch of up and down and up and down and up and down and up and down. Price right here is not going anywhere. You see that? It's not doing anything. This is the kind of price that can get you stuck. It does eventually go someplace, and maybe that's the kind of price we want to get into. But be really careful with how you choose your days to trade. Sometimes it's not the right time. Right? But if you find yourself in the right channel, maybe that's your strategy, and you see that price is coming back for your entries and continuing, coming back and continuing, and there's your pullbacks and continue, pullback and continue, and that's the type of strategy that you've tested, fantastic. We want to be able to get into the market when it is conducive for the strategy we've tested. Even this next section here, you can see that price was going in an uptrend. Maybe that's your strategy, and you see that price is moving and it's been like this for 15, 20, 30, 60, 120 minutes, then maybe want to jump in, right? If you see a really good solid setup based on your strategy with the trend, and that's the way you trade. If you're not that kind of trader, maybe you are a consolidation trader. Okay, you trade edges, that's fine. This trader, the successful trader here in their strategy may not work at all in this kind of consolidated, choppy up and down, stuck inside of a range type move. You have to know your strategy and know when it's going to work and when it's not. If you are a trend trader and you find the market just ranging, stay out. Right? It's extremely important that we do not take trades when the market is not conducive for our style of trading. Okay? So before we finish up, I want to give you a little bit of homework. So for the next 10 trading days, I want you to write down every single day before you begin trading, whether today is a trade day or a no trade day, based on the checklist and information that we talked about. Put this in your journal, write it somewhere, and then compare it and see how the day goes. See if some of those things work better. For example, how did you sleep last night? Write that down every day before you take a trade. You might end up noticing that the days you have fewer hours of sleep are actually correlated with the days you do worse in the market. If we knew that bad sleep for us personally equaled bad trading, wouldn't you stop trading on days when you don't get sleep? Right? We don't need to take a trade every day, remember, especially if you knew that those days would come with bad trades. All that does is eat into the profits that you made on the fantastic days. So look at that, make your own checklist, and try to identify what it is in the market, your strategy, your personal feeling, emotions, mental state that might actually be taking money out of your pocket because of trading on days when instead of good trade days, they are bad trade days. Why? Because they hit the checklist and they should have been no trade days. Remember, that is your third option. Win, lose, sit out. No trading is a trading position in itself. So thank you everybody for listening to today's episode. If you like it, please feel free to like and subscribe, and we'll see you in the next episode.